And I think we are live. Hello, everyone. Very happy to have you today for our live events. The idea today is to have the opportunity to learn more about specific topics related to blockchain gaming, obviously trying to leverage what our members, BGA members are doing, are building. And today, very happy to have Joseph Dillon. Hi, Joe. How are you?
Very good. How's it going?
It's going good. It's doing good. Yeah, it's going to be a very interesting topic. Obviously, might not be the easiest topic for sure, but you will be here to explain everything based on what Bitwave is doing. And yeah, I'm very happy to have you try to explain how your platform is bridging the gap between traditional accounting and Web3. So it matters for everyone, but it will matter as well for blockchain game to understand better. So yeah, please introduce yourself, and the stage is yours as well.
Thank you so much. Yeah. So again, my name's Joe. So I'm our director of customer success at Bitwave. Bitwave, we are an enterprise. We say, a digital asset tax and accounting platform, which really just means folks in the crypto industry, we help them get their accounting and taxes done. That is our software. So I came to Bitwave after about a decade in public accounting. So in the United States, I'm a CPA. So I look at a lot of what we do, through this accounting lens. And, I never quite know, we work with a lot of members of the BGA. Now, I don't know if accounting is the topic that everyone, is dying to think or talk about all the time. But it really is, I think, in our experience, in my experience at Bitwave, it's one of those hurdles, right? So from anyone who's on the sidelines of the blockchain crypto space that wants to get in, appropriate tax and accounting compliance
Yeah.
is sort of a prerequisite. And so it's like, you can dive in without thinking about it and maybe have a headache to deal with later, or you can kind of join a webinar like this and maybe start thinking about it sooner than later. So thank you so much for having me. I'm excited.
But of course, just because just before you start, obviously it also comes from a need from the BGA community members to understand better. We kind of try to have conversation around a lot of topics related to what they are doing in terms of blockchain games, and tax and accounting is one of them for sure. So I'm very happy to count on your expertise on that. So yeah.
Cool. Well, we'll get right into it. So that's me. You already heard all that, so we can move along. Yeah. This is like the thing I have to say. Everything we're saying here, it is not Bitwave is not committing to any services here. I am not giving you tax or accounting or investment or financial advice in any way. So, please don't take something I said here, and when you get, audited for your taxes, say, well, I heard this guy Joe on a webinar, he said it. So please do not do that. Work with your accountants, work with your professionals. I always have to say that up front. The agenda today, I'll give a quick background on Bit. We sort of already kind of started talking about it. And I want to touch on, kind of the foundational challenges of blockchain accounting. And then we'll get a bit more specific to the gaming space. What are the considerations that need to be made for a company in the gaming space that is either already in, the blockchain and crypto space, or is thinking about getting into it. And then we'll have plenty of time for Q&A and all that. And I absolutely really welcome questions. So if anyone has any questions, feel free to be sending them in.
Yeah, you're actually doing my work. So thank you, Joe. Obviously, if you have any question, do comment, do post your comments on the chat below, and Joe will be able to answer it. So
yes.
back to you, Joe.
Cool. So yeah, so this slide here, we are in the middle. This is a list of some of our customers. So these are folks who are using the Bitwave platform to get that accounting and tax part of their business done. So, we like to say we kind of, encompass the entire industry, because there's obviously, depending on the company, the team, where you fit, we have, actual, gaming development teams. We have some of the blockchains themselves and their foundations that use our software that that support, the blockchain gaming space. And then, all the way around to like marketplaces where some of the assets might be bought and sold. They use us too. So we kind of have a bit of a holistic view of the industry. And so that's what we're hoping to get into here of like, all right, we're working with all these companies. Like, what do we see? What do we see that the challenges are? And that's what I'm going to try to speak to a bit here. So my first slide here, digital assets plus businesses difficulty. Okay. This is like the most, and by the way, this isn't gaming specific. This is just crypto accounting. Like, why is crypto accounting hard? And there's a couple reasons, but one thing I want to put in everyone's head is just like kind of some of the theory behind this. My goal today is not that anyone in the audience is going to leave here an accounting or tax pro. My goal is not to teach you the rules. My goal is to just make you aware that some of these rules exist, right? And so one thing that we always have to keep in mind in the accounting world is that, like, if you've ever heard an accountant say it, they might say, oh, we have to maintain 2 sets of books. Well, what does that mean? And really what it means is like, hey, we have one set of records that we use for one purpose. We have one set of records we use for another purpose. So like in this example, we take the most basic, like, cryptocurrency transaction. You received one asset, whether it's 1 Bitcoin, 1 ETH, 1 USDC, literally any digital asset. Now, what do you have to do with it? So one, you have to account for it, maybe it's revenue or whatever it might be. You have to account for that in your records. And then you also now have this asset in your records that you have to track sort of forever. You have to follow it along through your books. And that's what that tax cost basis is. So it's like you have this one avenue where you need to, be documenting all your revenue, your expenses, and everything, all that relates to digital assets. But then you also need to be tracking all of these assets so that you can do your tax reporting appropriately. So it's sort of that's part of the inherent difficulty here is like a single action, a single transaction. You may actually have like a list of 2 or 3 things that you have to do with it, which sort of gets into why, folks end up looking for a software solution because of kind of the twisted web that this ends up weaving. I'm going to go, when you see a slide with a lot of text, don't worry, I'm going to go through it pretty quickly. I'll try not to put you to sleep. This is really just hammering home the same thing in the last slide, which is, look, it's not just if you receive a digital asset, it's any of this activity. So and when I say you, I mean, your company, if you're doing any of this activity, if you're holding digital assets, well, what are digital assets? I mean, they could mean, the assets that everyone knows, like Bitcoin and ETH and, the thousands of those that exist. It could mean NFTs. It could mean that you're doing lending or borrowing through a centralized service or a decentralized service. Every single one of these is going to create both, what we call an accounting obligation. And that's what I was talking about before of like, you need to be able to say what your P&L, your profit and loss is, right? Like, what is your revenue? What are your expenses? As well as a potential tax obligation, which it doesn't matter what jurisdiction you're in. If you see tax obligation, that means compliance. That means risk of audit. That means, all of a sudden there is this regulatory body looking at what you're doing that you're reporting to, which means, okay, all of a sudden the stakes feel a bit higher, right? Nobody wants to do this and get audited and get hit with a penalty or anything like that. So that's, I mean, I don't need to tell everyone here why it's important to track your stuff for taxes. Everyone kind of knows inherently what those risks are. But, if you just have wages from somewhere or, you're receiving customer payments from Visa, it's a little bit more straightforward. When you're operating on the blockchain, things get a bit more messy. So that same tax compliance tracking you're doing in your traditional business in the blockchain world gets a little bit more hairy. So I'd love now, this is like, again, not gaming specific. This is just blockchain accounting, crypto accounting. Why is it hard? The first one, I should have made the first one like 10x the font, because to me, it is the biggest first obstacle. it's getting all your data, like getting all your transaction data. And I think there's sometimes this misconception of like, well, it's all on chain, right? It's on the blockchain. Should be easy to get. But I'll tell you, as someone who's like, in the space every day, getting your transaction data can be difficult. And it's often because there's several different sources. So I'm gonna throw out examples. If you are holding assets on the Ethereum network and you have assets on Polygon, and maybe you have assets you're using an exchange service, you're using Coinbase or Gemini or Binance or FTX or whatever. Well, for now, maybe. You have all of these different sources of data, and bringing it all together in one home. That's the real struggle. So it's like normalizing that data and understanding what it is. And the understanding what it is really hard too. It's like, could you look at your credit card statement from 6 months, look at one expense and say, oh, I know what I spent that on. I know exactly what that's for. Okay, now try to do that instead. You're looking at an Etherscan link and all you have are some wallet addresses, no indication of what you sent somebody to ETH for. You got to try to figure out what it is. So it's like, okay, wow, organization, record keeping, all of these things, this kind of like planning mindset start to come into play because the data we're working with is sometimes complicated. And look, if you've looked at the logs tab on Etherscan, it can be hairy. Like there are some real easy transfers back and forth between wallets. There are some really complicated smart contracts out there. Funds flow through all different paths. So, looking back in hindsight and trying to figure out, it's hard enough, like I said, get all your data from all these places and bring it together. Okay, now I've got it. I got to explain what it is. And sort of the pressure that gets applied to all of that is number 3. And I wrote success equals volume. And I wrote that from the mindset of like, all right, if I was a game developer, something, I'm building something. Well, if I'm successful, that means I could be dealing with a lot of volume. And crypto is so like unique in this way. Exactly. Like if you think of like a traditional business or a retailer or something, you don't go from 10 transactions to 10,000 to 1 million overnight, right? It's like the steady climb upward. And as you climb upward, you're building to that, right? You're adding members to your team. You're adding back office functions. You're adding sort of the organizational structure it requires to handle that volume. Crypto's not like that. There are products that come out that hit right away that all of a sudden they have hundreds of thousands of transactions to figure out what to do with. So it's like, it really makes it so that you almost can't do it on your own. You can't do it without a software solution, which, is great news for folks like Bitwave, right? Because that's the whole we feel. But I like to raise that early because it's just part of that mindset of like, okay, we think we've got our plan. That works if we have 100 transactions a month. Does it work with 100,000? You might want to consider what would have to be different for it to work with 100,000, because hopefully that's what you end up with. And I think number 4, every transaction must be converted to fiat, meaning like your local government doesn't care that you received ETH or USDC or Bitcoin or whatever it is. Like they don't care. You have to translate it to fiat, meaning you have to price the transactions. Well, sure, that's easy for a lot of tokens that are traded very regularly. What about maybe the more, esoteric tokens, the more, maybe some chains that don't have the same volume? Where do you go to get pricing? And that means if everything needs to be converted to fiat, that means just purchasing a digital asset with a different digital asset. Say I bought an NFT with ETH. That itself could be a taxable transaction, at least in the United States, because you have to, when I spend that ETH on that NFT, the IRS in the United States is going to say, oh, you sold that ETH. You sold it, but the price of ETH is $1,500. You sold it for $1,500 and you spent the $1,500 on the NFT, not the ETH. And so even just literally buying something becomes a multi-part transaction that you have to parse out. So again, just speaking to the difficulty of doing it. unclear or inconsistent regulation, I mean, country by country, jurisdiction by jurisdiction, state by state, like the regulation is all over the place and is often non-existent. I think we are at a place where I would say the next couple of years are going to be very heavy with regulation coming. Some countries have been more advanced and ahead of the curve than others. Some countries view it as an opportunity to have, favorable, regulation to attract digital asset business to their region. Other countries are laggards and haven't made any rules. So folks are guessing a bit and trying to figure out what rules to follow. So that is just naturally like a difficulty. And especially an organization that operates in multiple jurisdictions, you might literally have a totally different set of rules for one entity versus your other entity. And that obviously, becomes difficult. And I'll say the last part is like, all right, it's all said and done. You've done all your stuff. You file your taxes. You get an audit, like whatever happens, you need support. You need supporting documentation. You need auditable records. Like that's, in that first example of like, oh, great, we received this asset. Now you have to track that asset forever. Like that is what this comes down to, is like, you got to be able to have records to show the governing bodies that be, that you've done this, that you've done your homework and you've done it correctly.
But actually, Joe, on point 5, regarding unclear regulations, how are you working in Bitwave to make sure that you can keep up with this and be flexible for every customer's clients that you could have, depending on the kind of situation they are and the regions they are living as well?
Yeah, I mean, that's a great question. Full disclosure, that is one of our challenges, right? We have to stay super up to date. And when changes happen, try to move fast. I think we are fortunate in that we have a lot of relationships, both with some of the standard setting bodies that are making the rules, as well as a lot of the big accounting firms that are going to ultimately help write the rules. And we have relationships with folks on the ground floor that are actually doing it. So we are, in a way, sometimes we're hearing about the needs and like sort of oh boy, that's an interesting type of transaction. Where does that fit into regulation? All right, let's go make a phone call and figure out where this fits. We really view it as our job to stay up to date. And I mean, to be clear, that's part of our value proposition, right? Of like, hey, we'll make it our job to stay up to date with everything so that, someone can have confidence. Because I fully believe 2 years from now, we might be operating with a completely different set of rules than we are now. So it's the idea of like, hey, you need a system to house all your data that you can then apply this regulatory filter to that data. And maybe 6 months from now, a different regulatory filter over that data. And again, in 6 months after that, and after that, and after that. So that's the treadmill we've chosen to get on at Bitwave. And it's a big challenge,
Perfect.
Okay, yeah, I'll speak to this. This is really just sort of like a quick visualization of what we're trying to do at Bitwave. So on the left, I've got, digital asset sources. This is what we talked about before. You might be on different exchanges. You might have wallets on different networks. You may have internal databases, right? Not everything is on chain. A lot of times folks are tracking stuff in some internal database. They have that plus some on-chain activity. They want to marry those two things. So that's where Bitwave kind of just sits in the middle, where we say, okay, bring us all that data, all your different sources. We're going to normalize it, get it consistent, be able to chew on it, price it. Remember that obstacle of pricing it in your base currency, in your fiat currency. And then we're going to push it out. And where we're pushing it out to, where you see that like NetSuite, Xero, Oracle, Sage, QuickBooks, those are accounting systems. We'll call them an ERP, but like those are your accounting systems where your other accounting records live. So the goal of Bitwave is to take all your digital asset activity data and get it in a format based in your fiat currency that can be fed right into your existing system. Like no one wants to like have to totally recreate the wheel with their accounting system. So if you're already operating like, hey, I use QuickBooks or I use NetSuite, great, that's fine. We'll plug into that, get all your data, make it in a format that those systems can work with. So then your digital asset financial records can live amongst all of your non-digital asset, traditional finance records. Oh, okay. Yeah. So so the next handful of slides, I'll go through them pretty quick. It's sort of framed from the mindset of like, all right, I'm a gaming company. Maybe I've got a product. I'm trying to figure out, okay, I figured out this is going to be my offering. We're going to come out with a token. We're going to implement NFTs, whatever it might be. So what kind of things do we need to think about before we like dive in head first? And, the first thing is like, one, you have to kind of figure out what your requirements are and like how you want things to marry up with your existing accounting records, and find a software solution. All those reasons I said of why it's hard. Essentially what it boils down to is like, you can't do this in Excel. I've tried it. And you know what? I will say I've seen some really impressive Excel spreadsheets from some of our customers, but it is, when they're coming in, in the door to Bitwave, but it is actually those folks who end up loving Bitwave the most, because like we're relieving them from their Excel prison sentence, because that's where they have to spend all their time. So, this first one is really about, okay, thinking critically about what your needs are, and is there a software solution out there for you? And I'll move pretty quickly through these three. And then it's, okay, there's a software solution out there. What are we going to do with it? Is this a completely separate entity? Are we going to be interacting with digital assets in the same entity as our non-digital asset activity? How do we want our financial statements set up, right? I made the P&L comment, your profit and loss comment before. Where do you want all these things to fit? There's sort of some like design choices here. And then it's getting a bit more prescriptive of like, okay, we've got our system. We have our big picture planning. Like literally, how are we going to do this every day? Every day we have a successful product. Great. So every day we have 1,000 NFT transactions. Well, how are you going to account for it? Do you have how are you going to do the day-to-day bookkeeping? What is your monthly process? It's that challenge of volume of like, this stuff can be relatively straightforward if you were doing it 10 times, but if you're doing it 10,000, you got to really start to think about leveraging a software solution to get a bit more automated and get into like kind of a regular reoccurring process. The other thing I want to touch on here, sometimes we call this the enterprise digital asset maturity model, which I'll show. We have a white paper on our website. If you go to bitwave.io, we have a whole white paper that talks about this.
And I will share it obviously on the comment section as well.
Cool. Yeah, it's really just a mindset of, if you're interested in getting into the digital asset space, and maybe you haven't been before, or maybe you are and you fit somewhere along this path, we kind of look at this in 4 levels of like, that first level is like, look, we're not super familiar. We're still trying to figure out where digital assets might fit into our ecosystem. Is it a token? Is it NFTs? Like, what might it mean? I think once you kind of figure out the business case or like the product use case, then it's like, okay, there's some risk management involved. That's kind of level 2 of like, all right, how are we going to handle these things? Like theoretically, like we're holding assets, and like the most basic like risk management in the crypto world is like your private keys. Like, are you going to hold them? Are they written on a piece of paper in your underwear drawer? Are you using a custodial service? Like, what level of risk management are you doing there? And then it's, okay, how can we step on the gas? What other systems are out there? What other services are out there? What can we do to really, accelerate this part of our business? And then like that 4th level is like what we would consider like, genuine enterprise level use of digital assets. Like, you're doing essentially, cash flow management, FP&A functions. You're really sort of like managing your risk at a professional level. This is that level 4 is a spot that, if you get there, things have probably gone well for you. So that's great. But we sort of think about this, and I think we were chatting beforehand about this. And so I wanted to bring that up. Like you had asked the question
Oh
of
yes, I was, but obviously you can go
what
on
was
for
it?
sure.
Well, okay, can you say that question again? Because I liked it.
Yeah, yeah. I really wonder what, based on the experience of the team, the Bitwave team, what kind of phases the companies that you met are on. Like, and maybe on a separate question, blockchain game companies, especially, do you feel like they're very mature in their ability to understand accounting for their in-game assets, digital assets?
Yeah. Okay. Yeah. Yeah. Thank you for saying it. So I think, to be totally honest, most people, a lot of people that come in the door are pretty immature. They're sitting somewhere between, and maybe not necessarily level one. By the time they've gotten to us, they have a use case. Maybe they're already using them, but they haven't gone down the rabbit hole of all the implications of it. But I would say most of the gaming companies are coming to this maybe at the front end of this sort of like maturity model. But one thing that I always like to point out is like the entire industry is sort of mature. And I think, to me, that's one of the great opportunities of the blockchain space is like, we'll see it from a gaming native company getting in the space that might be, it could be a 5-person team, or we'll see it from a Fortune 500 company that comes in the door and they've got, a traditional business and now they're pursuing digital assets. They may too also be at level 1 or level 2. It's not necessarily like an indication of your size, or it's which sort of like levels the playing field. To me, that is part of the opportunity of, I think, the digital asset space, and specifically in gaming, of it. There is certainly distribution is a competitive advantage, and with size comes distribution. But from an expertise and execution, it's more of a level playing field, I think, than maybe people would think, from the outside. So it's that, and that's true, in my opinion, across all of crypto, right? It's like, we're all here by choice because we've taken upon ourselves to learn it and get involved. Like, nobody here went to school for
Yeah.
it, unless schools are like, coming out with pro. Actually, I bet they probably are by now. But
But
you get,
actually, that means that most part of what you're doing in your activities at Bitwave are really focused now on education, obviously, at first.
yeah, it's a ton of what we do, and it's that dynamic is so great for us because we are maybe providing some education of like the nuts and bolts of the compliance and the tax rules and like all that stuff. But our customers are educating us on like what's literally happening, of like, I made that comment before, like we'll see somebody like, oh wow, we've never seen anyone use an NFT in this way. This is really interesting. What is this? So we have a chance to be sort of on the ground floor with a lot of like what's happening out in the industry. So that exchange of information, and like people are obviously so creative, crypto moves so fast. It's that education flow is two ways. We are learning just as much every day as I think we're teaching.
Got it.
Let me go to, okay. This, to me, this is like, there's too many words for a slide, so I hope you all don't read it and fall asleep. But I'm going to spend some time here because, to me, this is the heart of the matter for a lot of gaming companies. Like, these are the topics that we see discussed. These are the challenges we see that, like, if and even from our customer base, it's like, if they could go back in time and start day one, I think they would think about these 4 things a little bit more than maybe they did when they started, because the topics end up being sort of unavoidable. And so it's like, you either think about them now or you're forced to think about them later. So, I'll start at the top of like legal and accounting implications of what your offering is. And again, my goal here is to not have anyone walk away knowing what the legal and accounting implications are. I just want to make sure everyone knows there are implications, right? And those implications are different based on what your offering is and what your jurisdiction is. So whether are you going to release a token that's going to be used? Okay, well, what's that token going to be used for? Does it come with any rights? Does it come with governance rights? Does it come with the access to something? Who gets the tokens? How are they released? Like, how do you advertise the release of the tokens? There's all these rules related to releasing a token where, that, again, my job here today, I really view as like not to tell you what those rules are, but just to know that they exist.
But it's actually a perfect start that we have the opportunity to have you because it will be a conversation we will have with actually PwC on a panel specifically for that. So kind of the best way to introduce what we'd like to introduce in terms of legal and accounting. So perfect. This actually your first point that you mentioned.
I appreciate that. And you mentioned PwC. Like, there is often a point in the conversation where our customers are like, okay, it's time to tap somebody like one of those firms on the shoulder and bring them in. And, the more sophisticated and robust the customer, they might be working with those kind of firms already. Obviously, the smaller teams might not be, but there's a growing list of firms that are getting up to speed on this space. And so similar, like there's a whole bunch of rules about releasing a token. Same thing. Are you going to use NFTs as like in-game assets? That's one of the more common use cases we see. And the point I want to make about NFTs is, NFTs are complicated in that, like, I view NFTs like the NFT isn't the important thing. The NFT is the vehicle that delivers the important thing. And I'll try to like make that make sense. It's like the NFT is the box that it gets sent to you in. And sure, it's a digital box that's happening on a smart contract. But so like I put a couple bullet points in here. Like, and the real question is like, okay, if you're using NFTs as an in-game asset, your customers, your players, whatever it might be, what rights and obligations do they have? So when I say what rights, like, do they own the intellectual property of that NFT? If that NFT is a character, do they literally own that? Or, and now we're going to start to head down the legal path, which is when I tap out. Or is it actually a license to use the IP? Did you sell them the IP, or are you essentially licensing it to them? What else might they get with that NFT? Do they get access to different features in the game, perks, merchandise, I wrote, in real life goods, live events, all of these things, when you sell a customer an NFT, it's those things that you're selling. The NFT, like is just the box. It's just the vehicle that you put them in. And it's an amazing box, right? It allows for seamless delivery, decentralized processes. Like, it's amazing, piece of technology, but it is the vehicle by which you deliver those rights. And when I say obligations, it's like, hey, do they have to kick back if they sell the NFT? Do they have to kick back to you a royalty? That would be an obligation to the user, an example one. So I put it in bold. Terms and conditions really matter. Like, this is like, because if you follow like court cases and stuff like that, it's like, if you don't explicitly say the rights and obligations that people get, the governing bodies that be will determine it for you. And they'll go based on like, I mean, even as far as like, hey, you've thrown a big party every year for token holders. It can be reasonably assumed that someone buying your token expects to have the right access to that party. You sold them access to that party, even if you didn't explicitly say it. And like, so terms and conditions end up really mattering as much as you can eliminate gray area. You want to, I really think of like NFTs as like, when you go, like when someone goes to a website, you think like I'm going to probably mess it up now, the HTTP, right? Like, so no one says like, hey, I'm going to go utilize the hypertext transfer protocol.
Mm-hmm.
They just say they're going to a website. Long term, that's what I think will be with NFTs. Like, at some point, folks will be exchanging goods via NFTs without even knowing that's what they're doing, that an NFT is involved. So I think that is where the future holds. And the only reason why I make sure to call that out is because the word NFT becomes the much less important thing, and it really becomes about what lies beneath. What are you actually, what rights and obligations do they actually get? The other big consideration from like a tax and accounting and like compliance piece is custody. And custody literally just means like who holds the assets. And like I'll stick with the like in-game NFT use case for a second. Like, if that's what you're doing, if you have in-game NFTs, will the players themselves maintain their own wallets? Like, do they have a wallet on a blockchain that the assets live in? Who controls that wallet? Do they control that wallet? If so, that means they are what we would call self-custodying the NFT. Or instead, and we see places do this, right? Where you say, well, it's going to be really hard to onboard a whole bunch of people that have no idea anything about cryptocurrency and wallets. So I think Reddit most recently did a really good job of this with their release recently. But they might say, hey, we'll hold all the NFTs. So sure, like we're going to keep track of everything, who owns what, but you don't have to set up a wallet. We're going to hold it all. Well, now you are what the accounting and regulatory bodies would say, you're a custodian. You're holding someone's assets. And all I hope that folks take away from this is like, if you're doing that, there's rules to follow. There are rules, there are accounting rules, there's legal implications of that. Like if you are holding assets on behalf of your players or customers, there are legal, tax, and accounting ramifications of that. So it's something to consider.
Oh,
and then
it's interesting what you said, actually, because obviously setting a non-custodial wallet or a custodial wallet could be one of the first question game dev who wants to develop blockchain games kind of try to figure out. But they actually should be aware that it will impact their accounting as well, right?
100%. And it sort of speaks to like what we said of like, we were chatting about this before, it's like sort of like the ethos of like crypto is like move fast and break things. What's the saying? Like, ask for forgiveness, not permission. You know what I mean? It's like people have a tendency to dive in and like figure out all the details later. And we see that, but you will have to deal with the details later and the implications of that. And it is, at least after seeing people go through that, in my opinion, it's worthwhile thinking about these things. And I think what makes it tough is for, if there's like a team that skews on the smaller end, what I'm saying is like, hey, you may have to talk to some experts, and experts are expensive, right? And so there is a pain point there. And there is an aspect of like, man, like, do we really want to pay $1,000 to talk to this lawyer about our intellectual property offering in this NFT? And that might feel painful at the beginning, but I think it's the idea that like an ounce of prevention is worth a pound of cure, right? It's knowing that you're going to have to deal with this anyway. Like if you're successful, look, maybe if you're not successful and the whole thing peters out, you'll never have to deal with it. But like, if it works out how you want it to, and I'm willing to bet you want it to work out, you're going to have to address these things. So finding that time and that space, maybe at the beginning of your process to consider these things is really important. And the last one I'll call out is just like, can these assets be sold? Like, can these assets be sold, and where? Are you controlling? Can they take one of your NFTs and sell it on OpenSea? Or is there an in-game marketplace? Well, there's tax and accounting ramifications of maintaining an in-game marketplace. So it's just another thing to keep in mind. This is like, if we think back to that maturity model of like, all right, step one is figuring out how we're going to use digital assets. But then like, as you mature, it's like, oh boy, what are the actual mechanics of this? Like how is this actually going to work? There's quite a bit to consider, but what's great is like, this path gets worn more and more every day. So I think what was totally wild west, even a year or 2-3 years ago, we're starting to find best practices. There are more and more experts in the space kind of developing. So like the more and more information is out there for folks approaching it now.
Joe, I have a question. Might be a naive question from me, but actually, you know what's happening in the space in terms of royalties and some marketplace deciding that they should have a 0% policy on their royalties. Is it a subject related to accounting or not even close?
Yes. Yes, absolutely. And it ties into that number two, where I said like rights and obligations. The duty, like if I were to sell an NFT, to take some of my sale proceeds, like let's say I'm a player in a game, and deliver back to maybe you, the creator, a royalty is an obligation to me and it needs to be considered. But what has been so interesting in the space over the last, which I think is what you're alluding to over the last, maybe a couple months, is the idea of like, well, who enforces a royalty? Is it built into your smart contract, or is it actually the platform where they're being bought and sold? That's the more common scenario, that it is actually platform specific, that when I buy an NFT, there's actually nothing in there that says I owe somebody a royalty. It just so happens that like, hey, that creator was able to, OpenSea facilitated an arrangement for an NFT, but as we see, they can change their mind, or another platform like like a Blur or whoever can come in and say, yeah, no royalties. So it's I think there is an operational sort of like PR aspect to royalties, right? It's like definitely a very hot button topic of like what level of royalty is appropriate and what you're comfortable with, and what is the reaction from your target market for that. But then there's also like a mechanical function of it. I think folks who maybe got in the space and were just selling on OpenSea were like, oh, we'll always have royalties. And like all of a sudden it's like, wait, maybe we won't. So that goes back, I would say, on the more technical side of really understanding your smart contracts. Like really you really do have to get in the weeds. And I will tell you, as an accountant, meaning like to me, a non-technical person, it's hard. Like it can, you really need someone with that level of expertise, or a team of folks or professionals that you work with. So I think it's a great call out about royalties. It's like such a perfect example of something that like for a while seemed fairly straightforward and now feels very gray.
Got it.
Yeah. What do am I next? Oh, okay. Don't cross your eyes and get dizzy looking at this. We're not gonna like dig into this. This grid here is like, okay, the implications of NFTs. And again, my point here is not that you read these boxes and that oh, okay, if I sell an NFT, the sales revenue, is going to be, blah, blah, blah. And I'm going to know that for every individual type of action, there is a separate implication for both your accounting purposes. That's your like financial statements, your income statement, your balance sheet, what you might report to a lender, what you might report to investors of like what your income and expenses are and what assets and liabilities you have. That's the accounting consideration. There's a tax consideration, which is like, okay, I have to do reporting to my jurisdiction, to my whatever governing body in my area, and maybe there's some a tax liability due. And then there's an operational consideration, like even things like who has access to wallets, who has who is ensuring that assets are moving like they should be. So I would say there's sort of like a three-pronged consideration of there's an accounting consideration for every like transaction, there's a tax consideration, and there's also an operational consideration. So now what's great about this is at this point, most accountants that are working in this space know these rules. Maybe X number of years ago, that wasn't the case. These rules are out there. And a lot of it is about like relating maybe the NFT transaction to like a more traditional world transaction. That's what I end up doing a lot of times when I'm explaining it to folks. So like even in that first box, like you create an NFT, it's like, well, what do you do with your expenses? Can you expense them? Yes, you can. Like what went into creating that NFT? Did you pay labor costs for artwork? Did you have gas fees to deploy a contract? There are implications of every type of NFT transaction, and honestly, any digital asset transaction at all. So that's the point of this grid. Not that you know what actually lives inside of it, but just knowing that, oh wow, there's a couple moving parts regardless of what I'm doing here. And it sort of goes back to like, why being organized, sort of planning, preparing ends up being really valuable. All right, I think we're getting close to the end of our slides here, so thank you, everybody. I put this, I'm an accountant, so this is sort of self-serving when I say, Mike, make life easy for your accountant. Organize and create processes for wallets. I will tell you, if I had $1 for every time we have someone who is telling us like, oh, that wallet, yeah, half of that is personal, and then the other half is for the business, and then we do this with that wallet, but we also do this. Well, remember that whole thing about like trying to figure out what you did with that transaction 6 months ago? Becomes a lot more difficult if all your stuff is commingled. So we'll sometimes call that wallet hygiene, where we say like, okay, if you're going to use a whole bunch of wallets, set them up for particular purposes. Like, okay, we move ETH into this wallet and we pay our team with that wallet. So we know if there's outflows of ETH, those are labor expenses or whatever expenses. Okay, this wallet, this is where all our royalty income is going to come into. So we know those inflows that, then the accounting side, the bookkeeping side becomes a lot easier. So being intentional, I will say, about your wallet setup. Diligent internal controls. This is, like I said, who has access to what. I think this piece is actually, well, there's this idea in accounting of like segregation of duties of like, hey, should the same person have access to the wallet and also be able to carry out transactions? Or do you want to split those things? I think the smaller the team, the less segregation of duties there are. Usually the same people are carrying out, a lot of different functions. But as your team might grow, as your business might grow, internal controls, which are essentially like internal controls are just like, it's kind of like an accounting industry term to say like, what are your safeguards? What are your processes in place to protect yourself from your funds walking out the door? So that you don't, part ways with a developer and they leave with with all of your assets, so diligent internal controls, clear communication. And this is like communication being, I think there's often a disconnect between the folks doing the accounting or bookkeeping or whatever it is and the people carrying out the transactions, right? Like the people who are actually carrying out the transactions that actually have the knowledge of what they're for, those often aren't the same people doing the bookkeeping. So figuring out a way to communicate those things so that the accountants that you're working with have the info they need to get it right is important. And, this is like, keep good records. I mean, that's sort of like always the case with your accounting, like any records you can have, but like, kind of goes back to why a lot of folks need a software solution like Bitwave, so that you can go back at any time and like, oh boy, I need my March 2020 transaction list. Okay, I can go in and get it. If you're not using a software solution, that becomes pretty tricky. And, be proactive. That's sort of like the heart of everything we're talking about, right? Is just think about these things on the front end and maybe save yourself a headache or two on the back end. I think we're there. That's our Q&A. Yeah.
Yeah, actually, I tried to do the Q&A before we got into it, but I guess on my side, based on the comments, I don't have any questions for the crowd. But obviously, it's very interesting, and it's very interesting to know exactly what kind of behavior you should have when you are managing a lot of in-game assets, specifically through blockchain game companies, and what kind of thing you could think of. So I think it was a wonderful way that you put that and structure that. And I kind of try to put some notes, and I won't be the best, may not be the best to sum up everything, but I really enjoy you talking about the ability for everyone don't wait until you got millions of transactions for your game registers, which is very interesting to know. You mentioned of the fact that you need to figure out, you lead a company, so that means that you should figure out how to marry these blockchain accounting with your existing accounting system. So that's where you come into place, and understand the legal and accounting implication of your NFTs. It's really a part I really enjoyed. So obviously you will be able to go through all of that with Joe's presentation, and yeah, I think it was very comprehensive. So thank you very much, Joe, for everything.
Thank you so much. So my team would kill me if I didn't say we have a YouTube channel. Go subscribe. We try to post webinars, the video recaps from there on here. Also, like, we're very available. Like, I'm very available. I'm Joe Dillon. You can find me on LinkedIn. You can find me on, I think I'm Joe Dillon CPA on Twitter. Like, if you ever whether it's specific questions or like, hey, I'm just looking for a place to learn more, by all means, reach out. Like, we love this space. I mean, I could go back to that first slide of all the companies in this space we work with. This specifically, like the gaming industry, is so exciting for us. It really feels like so cutting edge and fun. We love talking about this. So if anybody has any questions, wants to find out more info, please don't be a stranger.
Yeah, perfect. And actually, for BGA members, obviously, you will be able to engage with the Bitwave team, especially with Megan, and I'm sure she's watching as well. So yeah, thank you again, Joe, and wishing you a very good day.
Thank you so much. Thanks for having me. Thanks for everybody for listening. I really appreciate it.
Thank you very much. Bye, everyone.
Bye-bye.